markets continue to hit record highs. But our guest says if you actually look at the macroeconomic data in the US, it isn't especially strong. But he does see some bright spots and some compelling investment opportunities. We're joined by Pierre-Benoît Gauthier, Assistant VP Investment Strategy at IG Wealth Management. Thanks very much for joining us.
Hey, thanks for inviting me.
It's interesting, yeah, the stock market booming, but the US economy, you say, not all that strong.
No, but the data coming out is not that strong, but it's still mostly better than expected. The economic surprise index has actually quite rebounded pretty hard since July, but the latest jobs number kind of threw a wrench in the whole thing, and now we're looking at the possibility of a double cut in the next Fed meeting, which would have been quite science fiction not too long ago.
Science fiction because the economy seemed to be so strong and inflation was proving so stubborn.
Exactly. And when you look at the consumer in the US still out there. You're looking at the banks. They don't see any problems with the US consumer. If you look at the last results, their commentary on the consumer. And when you look at the consumer discretionary index in its equal weight form, it's a new all-time highs. So right now, you have the macro data telling you something, and the investor kind of shrugging it off and keeping buying stocks. So what we're seeing ahead is a continuation of that pattern, but maybe at last the infamous rotation might happen, because for a long while we've been looking at leaders dominating the markets, and now we're seeing some kind of the beginning of a rotation. When you look at the Nasdaq still making new all-time highs, and yet Microsoft is kind of weak, almost down 10%. Nvidia almost 10% down too, both trading under their 50-day moving averages. Bitcoin even has dropped 10-ish%. So these stocks that you would think would do very well when the Nasdaq is at all-time high are actually not doing that great.
Do you think we could be in an AI bubble in the sense that NVIDIA has gone to a $4 trillion US market cap?
Yeah, the problem with this notion of an AI bubble is that the spending is real and the revenues are also real. So it's not the dream of a future sales, future revenues. They are happening now. Now, is it going to be the same winners of yesterday tomorrow? That's not a given. We already saw lately we've been hearing more and more about NVIDIA having too few clients and this becoming a concern for investors. And we also saw Broadcom gaining some market share. So there's definitely going to be winners and losers in this war, but we wouldn't call it a bubble per se. Definitely not like a late 90s, early 2000s style situation with the internet. We're not seeing the same patterns at all. We're probably more akin to a mid-90s scenario in the stock market, and even in some matters economically too, in some sense.
You reckon that when you look at sentiment among institutional investors, it's not all that bullish, even though the markets are at record highs? Well, perhaps that's why some of them are getting cautious.
Yeah, that's especially interesting. And you would believe that the market's doing so great and returns being good that the overall investor would be extremely bullish, but they really aren't. When you look at the American Institutional Investors Survey, the bearish readings are pretty high, and this is more bullish for us. This is contrarian. So when everybody's bullish out there, that's probably a yellow flag at the very least, if not a red flag. But now there's still marginal buyers, meaning that when people are still bearish and probably underweight stocks, these are potential future buyers. Whereas when everybody's fully invested and fully in on stocks, it's potential future sellers. So the current feeling of the market for us indicates that there could be a support ahead, even if we saw weakness, the infamous seasonal weakness of September. maybe that could trigger a buying opportunity for some of them, especially considering that to us, the seasonality aspect probably a bit overblown, meaning that when we enter September on a strong note like we are now, usually the returns are not that bad. It's when we enter September on a bad note that they get worse. But September could provide some buying opportunities for sure.
Pierre-Benoît, we better jump. Thank you very much for joining us.
Thanks so much.
Pierre-Benoît Gauthier, Assistant VP Investment Strategy at IG Wealth Management.